Rajiv Khatlawala here from Investo Gyan, and today we are going to see how to analyze price charts based on moving averages. Well, this is by default a Euro USD chart, so let us check the moving average usage on gold. Now what you observe here is the gold chart expressed in dollar terms, and the type of the chart which it is said is the candlestick charts. If you observe, each of these days movements is represented by what we call a candlestick. In fact, you can also have another type of a chart. The same chart can be expressed as a bar chart, which would look something like this, and the same chart can also be indicated as a line chart, which would look something like this. Well, let us go back to the candlestick chart, which is more visually appealing. Now on the gold chart, this is actually a live chart as of 2nd of September, and the current price which you observe here is 1245. Now on this chart, let us put the moving averages. So let us check in the studies portion. Here you have moving average exponential. The word exponential would mean that the moving averages are further smoothened out statistically. By default, you have a period mentioned as 10, which means 10 days moving average, because we are on the daily charts. Let us say add. If you observe on the price chart, the green line has been superimposed on the candlestick charts, and that is called the moving average, that is 10 days moving average. Now let us also put in one more moving average. Let us say, for simplicity, a 20 days moving average. We'll change the color here to, let us say, something a darker color here, a brown color, and let us put that also. Now what you have is two moving averages. The green line represents 10 days moving average, whereas the brown line which we just added represents the 20 days moving average. Now the two moving averages, whenever they have a tendency of crossing each other, for instance here, for instance here, for instance here, in this case it is called a crossover, and a crossover of moving average will give you a signal, a buy or a sell signal. So let us understand what is a sell signal and what is a buy signal. When the shorter term moving average, which is the 10 days moving average, the green line, cuts the longer term moving average, which is the 20 days moving average, the brown line, when the 10 days moving average cuts the 20 days moving average from below, this is called a buy signal. Conversely, therefore, whenever the 10 days moving average cuts the 20 days moving average from above, the crossover occurs here. If you observe, this is the crossover point. This is called a sell signal. Let us see on the price chart how this simple crossover system would have worked. I'll just put in some more data. This is the price charts right from let us go to the information window, right from September 09. Here you have a buy signal. The price is at this point is at $990.